Hello friends, Ruslan with you on Infoport Finance. Today we will talk about how to start your business from scratch and not step on the rake that many beginners step on. Imagine, you put your heart, time, money into your business, and after a couple of months you realize you made a mistake that could have been easily avoided. Is that a shame? Of course you are. And unfortunately, that's the story of many entrepreneurs. But there's no need to give up. We're here to help you navigate these pitfalls and build a successful business. In this video, I'll share with you the experience of experts and talk about the most common financial mistakes. We'll break down each step in detail, from budget planning to revenue management. Stay tuned, it's going to be interesting and rewarding. So friends, let's start with the most important thing, setting financial goals. This is the first and most important step on the way to the success of your business. Without a clear understanding of where you are going, it is very difficult to move forward. Imagine going on a journey without a map or compass. You can go in any direction, but you are unlikely to reach your desired destination. It's like the proverb, you can't get a fish out of a pond without work. To achieve your financial goals, you need to make efforts and be ready for difficulties. Financial goals are specific, measurable results you want to achieve in your business. They help you focus on what's really important and put your efforts in the right direction. For example, it could be increasing profits by 20% in 1 year, entering a new market, or launching a new product line. It is important to understand that your goals should be specific and measurable. It is important to set ambitious but realistic goals. This means that your goals should be achievable, but at the same time require effort and motivation from you. Goals that are too easy will not motivate you, while goals that are too difficult will, on the contrary, discourage you from pursuing them. Find the golden mean so that your goals are difficult enough but still achievable. And too complicated, on the contrary, will discourage any desire. It is also important to consider time frames. Set specific deadlines for your goals so that you have a clear idea of when you should achieve the result. Remember, friends, clearly defined financial goals are half the battle. They help you focus on what's really important and put your efforts in the right direction. In the next section, we will cover how to properly formulate your goals and turn them into a real action plan. We will look at different methods and strategies that will help you achieve your financial goals and make your business successful. Stay tuned, and you will learn a lot of useful and interesting things. Friends, let's move on to an analysis of the most common financial mistakes. And the first, perhaps the most dangerous mistake, is misjudging your startup capital. Many aspiring entrepreneurs underestimate the amount of money they will need to launch a business. As a result, they don't have enough money to rent space, buy equipment, advertise, and other important things. This causes the business to bog down right from the start. You have to borrow money from friends, take out loans at high interest rates, and in the worst case, close your business completely without realizing its potential. To avoid this mistake, it is important to conduct a thorough market analysis, research competitors, and realistically estimate all upcoming costs. Don't be like the hero of Krylov's fable, The Pike and the Cat. It's no good to take up something that is not your own. Let's imagine you've developed a business plan, attracted investment, and are enthusiastic. But as time passes, you notice that money is slipping through your fingers. Sound familiar? Often the reason lies in the banal failure to account for all costs. We can keep in mind large expenditures such as renting or purchasing equipment. But as they say, a penny saves a ruble. Office supplies, communication costs, software, transportation costs, a penny a penny. All of these little things can add up to significant sums that were not factored into your budget. In this section, we'll go into detail about how important it is to account for every penny and show with real-life examples how not paying proper attention to small expenses can lead to serious financial problems. So you've analyzed the market, developed a business plan, and know exactly how much money you need to get started. The next question that arises is where to get them. Choosing a source of funding is an important step on which the future of your business depends. Loans, investments, own funds. Each option has its pros and cons. It is important to carefully weigh the pros and cons of each option. For example, bank loans may seem attractive, but keep in mind the interest rates and the need for repayment. In this section, we will break down each of the funding sources in detail. We'll tell you the risks and benefits so you can choose the best option for your business. Having determined the sources of funding, we move on to an equally important stage: pricing. What price should you set for your product or service? Underpricing can lead to losses and undermine the credibility of your business. Overpricing will scare away potential customers and make your product uncompetitive. How to find the golden mean? It is important to consider many factors: cost of production, competitors' prices, the value of your product to the consumer, the market situation. In this section, we will look at the main pricing methods. We will learn to analyze the market and competitors so you can determine the best price that will benefit both you and your clients. Do not forget the Russian proverb: good product, good and the price. Friends, let's talk about taxes. I know it doesn't sound as exciting as, for example, a fishing trip, but trust me, it's just as important. Taxes are an integral part of our lives, and proper tax planning can have a significant impact on your financial well-being. Improper tax planning can lead to serious financial losses, if not jeopardize your business. Imagine working on your project, putting all your energy and resources into it, and in the end, you are faced with a huge tax liability you didn't even realize you had. Many budding entrepreneurs, fascinated by the idea of their project, forget about the tax component. They think that they will sort it out later. But unfortunately, the later may come too late, and you find yourself in a situation where nothing can be changed. Time flies fast, and if you do not pay due attention to tax planning from the very beginning, you may face serious problems in the future. Ignorance of the law, as they say, is no excuse. Tax authorities will not take your excuses into account and may impose fines and penalties for late payment of taxes or incorrect calculation of them. Therefore, friends, I strongly recommend that from the very beginning, you understand in detail the taxation system that applies to your type of activity. Study all the nuances and peculiarities in order to avoid unpleasant surprises in the future. Explore all the exemptions and deductions you may be eligible for. This can significantly reduce your tax burden and save you significant amounts of money. The best thing to do, of course, is to consult an experienced tax advisor. A professional will help you to understand all the intricacies of tax legislation and offer you the best solutions for your business. Yes, it costs money, but trust me, this investment will pay off 100-fold. A tax advisor will help you avoid mistakes that could cost you much more. After all, as the saying goes, the miser pays twice. Don't skimp on professional help when it comes to taxes. It can save your business and save your nerves. Proper tax planning is the key to your financial success. Do not neglect this important aspect and pay due attention to it. Good luck in your business, and may taxes never become a problem for you. So, friends, your business has started to make a profit. Great, but don't rush to spend every penny. Misallocating profits is one of the most common mistakes made by aspiring entrepreneurs. It often happens so. Got money, rejoiced, bought a new phone, car, went on vacation, and then, bam, there was no money left for business development. Sound familiar? To avoid such situations, you need to develop a clear profit-sharing strategy. It is important to determine how much of the profits will be allocated for reinvestment in the business, which one is for a contingency fund, and which one is for personal use. Remember, friends, a business is like a tree. In order for it to grow and bear fruit, it needs to be constantly watered and fertilized. Friends, today we will talk about the circulatory system of your business, cash flow. The financial health and stability of your business depends on proper cash flow management. What is cash flow? It's the cash flow in your business. Sales revenue, investments, loans. It's an inflow. Expenses for rent, salaries, and purchasing goods are outflows. Cash flow management problems are one of the most common causes of bankruptcy, especially among young companies. It would seem that the business is profitable, sales are growing, and still not enough money. Friends, today we will talk about the importance of a reserve fund. Many aspiring entrepreneurs underestimate its importance, which can lead to serious problems. Imagine a situation. Your business has encountered unforeseen difficulties, such as equipment failure or delayed deliveries. Without a reserve fund, you may find yourself in a situation where you have no money to pay your employees' salaries or cover ongoing expenses. This can lead to business interruption and even bankruptcy. Don't let this situation happen, friends. Take care to build a solid financial safety cushion. As the saying goes, prepare your sleigh in the summer and your cart in the winter. Friends, business is not only about money, but also about legal literacy. Unfortunately, many entrepreneurs neglect this aspect, which can lead to serious consequences. For example, an incorrectly drawn-up contract with a counterparty may result in financial losses or litigation. Ignorance of tax laws can lead to fines and penalties from the government. So friends, don't skimp on the services of a qualified lawyer. Friends, business is a team. The success of your entire business depends on how professionally and cohesively your team works together. However, many entrepreneurs make mistakes when hiring employees, which can lead to poor performance and even conflict within the team. For example, hiring an employee without the proper qualifications can lead to poor work and financial losses. And ignoring a candidate's personality traits can cause a tense atmosphere in the team and reduce employee motivation. Remember, friends, one man is no match for another. Friends, today we're going to talk about a mistake that many aspiring entrepreneurs unfortunately make: ignoring the importance of marketing and promotion. You may have created a unique product, put all your heart into it, but without a proper marketing strategy, no one will know about it. Imagine a store tucked away in a blind alley with no signage or advertising. How many buyers will find it by accident? Probably not many. The same goes for businesses that don't pay proper attention to their promotion. Without a sound marketing strategy, your business is like the hero of the fairy tale by Pike's Will. You can wait for things to work themselves out, but the chances of success will be minimal. Friends, even the most successful startup can hit a ceiling if you don't think through a growth strategy in advance. After all, what happens when a business starts generating a steady income? Many entrepreneurs relax, thinking that this will always be the case. And the market is dynamically moving forward. New players are emerging, customer needs are changing, and technology is changing. Without a clear plan of action on how to respond to these changes, even the most promising business risks falling by the wayside. That's why it's important to think ahead of time about how you will scale your business to increase production, enter new markets, and expand your product line. Without it, you risk missing opportunities and giving away your market share to competitors. Friends, we've taken an in-depth look at 12 of the most common financial mistakes that can stand in the way of your business success. These mistakes may seem insignificant at first glance, but their consequences can be quite serious. We've discussed how mismanaging your finances can lead to stress and even business failure. It's important to realize that every mistake can be an obstacle to your goals. We talked about the importance of proper budget planning, estimating startup capital, accounting for all expenses, selecting funding sources, and proper pricing. We discussed the need for tax planning, profit allocation, cash flow management, and building a reserve fund. These aspects are the foundation of the financial health of your business. And of course, we talked about the importance of legal literacy. Understanding the legal aspects of business will help you avoid many problems and protect your interests. We also discussed the right approach to hiring employees, effective marketing, and planning for business growth. These elements play a key role in the long-term success of your business. Remember that knowledge is power. Use this information to avoid unfortunate mistakes and build a truly successful and profitable business. Training and constant development is the key to your success. Be sure to subscribe to the Infoport Finance channel so you don't miss new episodes. We will continue to share with you useful information and tips to help you grow your business. Give us a like if the video was helpful to you and share your opinion in the comments. Your feedback helps us get better and create content that really matters to you. Don't forget to share this video with your colleagues and friends so they too can avoid the same mistakes and succeed in their business. Your comments and questions are always welcome. We appreciate your input and are ready to answer any questions you may have. I wish you good luck and financial stability. See you again. May your business thrive and bring you joy and satisfaction. Thank you for being with us and see you soon in new issues. Remember that success is the result of hard work, good planning, and the ability to learn from your mistakes.